How to find lease option properties. Are you curious about how to find lease option properties? If so, you are in the right place. Let's break down the steps to help you navigate this exciting area of real estate investing. First, it is essential to grasp the basics of lease options. A lease option is a contract between a property owner and a potential buyer. It combines a lease agreement with the option to purchase the property later at a predetermined price. This setup allows you to control a property without immediate ownership, which can be a great way to reduce upfront costs. Next, you will want to identify motivated sellers. Lease option properties often come from sellers who are eager to generate rental income while keeping the option to sell later. Look for owners with properties that have been on the market for a long time, absentee landlords, or those facing financial difficulties. Properties that do not qualify for conventional financing can also be good candidates for lease options. Sellers who are open to creative financing solutions are often your best bet. Now, let's talk about how to find these opportunities. Start by using targeted marketing and networking. Search online listings and filter for terms like rent-to-own or lease option. Reach out to real estate agents who specialize in creative financing or investment properties. Networking with wholesalers, property managers, and other investors can also yield great leads. You might even consider advertising directly to property owners who might be interested in lease option arrangements. Once you have identified potential lease option properties, it is time to analyze them carefully. Evaluate the agreed purchase price and see if it aligns with the market value. Look at the lease term, which usually lasts between 1 to 3 years, and check the monthly rent amount. Pay attention to the option fee, which is a non-refundable upfront payment for the right to purchase. Also, consider any rent credits that may apply toward the purchase price and clarify responsibilities for maintenance and repairs. Negotiating and structuring the agreement is a key step. Make sure the contract clearly specifies all terms to protect both parties. The option to purchase should be stated clearly and be exclusive for the lease period. Ensure that the purchase price and terms are fixed or include agreed-upon escalation clauses. Transparency regarding rent credits and the option fee is essential, as are contingencies for financing or inspection. Lastly, use lease option analysis tools to perform a financial analysis. Assess the investment's profitability, including cash flow during the lease, potential appreciation, and any costs involved. This analysis will help you decide whether to exercise the option or walk away. In practical terms, lease options can be a strategic way to acquire properties with limited upfront funds. They allow you to control assets while building credit or waiting for market conditions to improve. You can even sublease or assign the lease option to other buyers, creating additional profit opportunities. By combining targeted searches, networking, thorough financial analysis, and careful negotiation, you can effectively find and benefit from lease option properties.